Felix here, markets are up. The Dow is up 800 points or something crazy like that. But why is it happening? Do you understand the reason behind it? And can you therefore predict and understand what's going to happen in the near future so that you can make money out of this market? Well, that's what I'm going to explain to you in this video so you can do this on your own. Before we do that, I normally give you benchmarks of useful stocks and lists that are made by investment banks, which I think are particularly useful. This one here from UBS is a list of what not to buy, I would say. So look at the 9 stocks that may harm you in a recession at felixfriends.org/UBS9, felixfriends.org/UBS9 from the Swiss cousins of Credit Suisse. And here it is. Why do I think these companies suck? Because of the numbers are highlighted in red. So have a look at it. You might agree with me, you might disagree with me. I'd love to hear it. Put it in the comments. Margins are abysmal. Free cash flow is virtually non-existent for all of these except for O'Reilly Automotive. Financial leverage is through the roof. They all have like 2, 3, 4, 5, 300 times their equity in debt. Insane stuff. We've got long-term earnings rates for some of them well, the one actually looks among the best. Walmart is 5%, which is just half inflation. Why bother? So how these stocks save you from a recession, I don't know. UBS might know. You know, they're very good at value destruction. So take this one as a lesson. The link at the top is nonsense. Here it is again, felixfriends.org/UBS9 lesson in there, I would say. Now, this is the S&P 500 as we speak. It's tremendously rallied from the Friday low below 3,600 and it's shot back up. And if you were part of my community, my coaching community on Friday, we would have warned you about that drop at the end of the day in advance because it was somewhat predictable. Now, looks lovely, doesn't it? Everything is up, everything is brilliant, volatility is down. Commodities, however, are really, really flying. Why are they flying? Well, OPEC is going to cut production. They think oil is too cheap. We've got the manufacturing index came in today and it's sliding. And that is a good thing for stock investors. Why? Because we actually want the recession sooner rather than later. But particularly concerning is the index of new orders. That's really coming down to pretty low levels. Let me make this a straight line here. And you can see, go back a few years, we're at, well, just pre-COVID levels, really. That's kind of where we're at. So economy not looking super healthy on the manufacturing side, but we had a lot of bad manufacturing data. And then somehow it always, the market rebounds and we get some tight labor market data and so on. Here you can see a bit more of that. You can see the new orders pretty low. That's what that is, new orders. The white line is, the orange line here, that one is employment. So that's also coming down. So there is, after that unexpected peak, there is some good news from a Fed point of view, which might be positive. Now, what are we talking about here to really understand the market? Well, one of my coaches posted this on the 28th last week, 2 days before the end of the week. And he said, look, next week should be calmer because there are large options open. Interest dealers have a lot of negative gamma. Don't worry about the technicals here. Basically, they're being whipsawed on the hedges, which makes the price action vulnerable and wild intraday swings. And about 20 billion of S&P 500 options are closing on Friday. That was last Friday. That's exactly what happened. And that should make life a little easier, as in market should go up. And that's precisely what happened. If you look at the last 8 minutes of Friday, and we don't have crystal balls or anything, but we kind of knew the last 10 minutes of the day would be crazy, and they were. We dropped from 3,600 down to 3,585, which was tremendously important. And today we're running back up. And why is that? Well, let me give you the insight again, a la John, which is basically the expiration of the large put positions is a turning point. So you get a short-term rally. Now, short-term is the word I'd really underline and highlight here. This is not a lasting rally from my point of view. And of course, none of this is financial advice. I just aim to share with you my educational sort of content here to make you into smarter investors. Obviously, you want to understand this yourself. And that's the reason here. So essentially, we had a decline in implied volatility. That's what we were expecting. And look at how much we went down by. It was 5% today. That's the number here. Volatility down 5 percentage points. That is huge for a single day move. So far, what we are saying here seems to be very much true. So the market starts to rally here. We could get some more short covering. Essentially, the market's going to go higher and higher, and volatility keeps declining, and that's kind of good. But basically, if we go back below 3.6, the whole thing starts going back kind of negative here. So this is a relief rally, in my view. This is not a turning point because macro-wise, nothing has really changed. All the Fed officials are out there warning of persistency in the inflation. Their job isn't done yet. Energy prices are going up again today. So that's more inflation to come. So this isn't over. The fat lady hasn't sung yet. Unfortunately, we'd like that to be the case. Credit Suisse also causing lots of calamity. If you want to watch out this morning, I put a full video out on explaining that. No real progress there, just whipsawing of share prices and their CDSs. But they are in trouble, but they're not in like calamity sort of waters yet. And I say yet because they're trying to sell parts of their business, and doing that in this environment is incredibly difficult because you're not going to get great prices. You're going to have to sell stuff at a discount. They desperately need to raise some money, at least $4, $5, $6 billion. And likely the restructuring is going to cost them quite a lot of money, a lot of billions of dollars. Laying off bankers, it's expensive business. So they'd like to sell them instead, but I'm not sure there are any buyers there. So the whole mess of Deutsche Credit Suisse is going to hang over us for some weeks, if not some months here, until that's sorted. Market's going to continue to kind of whipsaw up and down. If you want to be part of the insight as it happens live, check it out, felixrenzel.com/coaching. If you have at least a 5-figure portfolio, that's the place for you to check it out. Have a chat with us. You can learn from me and my coaches directly at felixrenzel.com/coaching. If you're not quite there yet with a 5-figure portfolio, that's also fantastic because the fact that you're watching this means you want to learn, you want to push yourself, and you want to get to the 5 figures so you can progress from there. The beginning is the hardest bit, it's true, but we have a helping hand here. We can teach you how to build an extra income stream with options trading. And I really mean that in not what most people are doing. Most people buy call options, they buy leaps, they gamble, they do covered calls, which isn't terrible, by the way, but it's just not very profitable. So what we do is very, very different. We kind of mimic the way professional options traders make money. And we teach you that in its full glory, in its full strategy. You get to see me trade live every week and everything else as well. Check it out, felixrenzel.com/options. And if you have any questions, put them in the comments below. I appreciate sometimes some of the stuff gets a little technical and I sort of apologize for that sometimes, but I also think it gives you an insight and an eye-opener into kind of like what happens behind the scenes. And I think that's really important so that gradually this mysterious, nebulous world becomes clearer to you and it allows you to make a heck of a lot more money than you presently are. So check it out. Thank you very much for watching. Thanks for tuning in, and I hope to see you on the next one.